Hey guys, welcome back to Option Clutch. Today we'll be talking about the only stock investing setup that you'll ever need. So let's get to it. For this, you need to know about market structure, candlesticks, support and resistance, breakouts and fakeouts. All of this I've covered in my past videos. Please go and check it out. But the trading view charts I will get to in another video. I'll explain how to do that. And lastly, you need to have money, because without money, no investing. So that's the golden question. What is the setup? Everyone's eager to know. So what is the setup? Let's see. So it is basically chart patterns. So we have a lot of chart patterns that exist in the market, like head and shoulders, inverse head and shoulders, double top, double bottom, triple top, triple bottom, falling wedge, diamond, broadening. So there's a lot of chart patterns that exist in the market. But first we should know about support, resistance. Then we need to know about breakout, fake out. So if we know about all of those, then only we'll know about chart patterns. So chart patterns, how they form? They form in, let's say, daily and weekly time frame. Even 1 minute, 5 minutes they form. But daily and weekly time frame, the market behavior is shown in the pattern. So if you look at head and shoulders pattern, so the market wants to go up, but it is not able to go up. So this is a type of triple top pattern where market is consolidating but is trying to go up at the same time. So when it finally fails, breaks below the support, the market finally falls down. Same with inverse head and shoulders. So the market in inverse head and shoulders tries to go down, but then it breaks the resistance from where it came and market goes up. So a lot of buying has happened here, accumulation has happened here, and finally the market has gone up. Same thing in head and shoulders. So what happens? Market comes to a level and distribution of price happens. So distribution of price happens and finally the market fails and falls down. So double top and double bottom. So when you're talking about double top, this is same market psychology. Market is trying to go up, breaks support and falls down. Same with double bottom. Market is trying to go down but breaks resistance and goes up. For us, we need to know inverse head and shoulders, double bottom, triple bottom, falling wedge, diamond. Then we need to know long periods of consolidation after which the market goes up. So accumulation of price happens and then finally it goes up. So this is a highly bullish pattern where market is going in strong momentum. Then some distribution of price happens and then the market continues upwards. So these patterns are important. If you want, you can take a screenshot. But I will explain to you in the next slide what are the most important patterns and 3 types of patterns that you will find, and those 3 only you actually need. But these also help for trading, especially cup and handle, pennant, flag, then your double bottom, double top. All these help in trading. But for investing, I'll give you 3 patterns which will help you. So the only ones you need is bull continuation patterns, reversal patterns, and channel and wedge breakout. So bull continuation patterns are your bull flag which goes up, then bull pennant which goes up. So it looks like a flag. So you draw straight line and market travels in a channel before breaking out. So that is called bull flag. Bull flag, it makes good lower lows. It looks like it is in a downtrend. Definitely it looks like it's in a downtrend because market is making lower highs, lower lows, lower highs, lower lows. But in the broader time frame, broader trend, market is going up. So it's a continuation. Market consolidates, price distributes and market goes up. Same with pennant. But in pennant, what happens is you will get a triangle kind of figure here. Almost a triangle where market consolidates and you get a breakout. So normally if you want to know how far the stock price will go, how do I know? Because after the breakout, it is breaking out, but how do I know how far it will go? So as a thumb of rule, either the consolidation, you draw a line here and you take this line and plot here after the breakout. So what do I mean by that is, let's go to a fresh page. So let's say the market is in a bull flag. So let's say the price is consolidated, distribution has happened, and finally a breakout has happened. Okay, finally a breakout has happened over here. So what do I need to know? I need to know that my first target will be this consolidation that has happened. So price from here till here, I will plot a line and I will draw this line here. The same, I'll take this line and I'll put it here. So my first target will be this line. So if price touches that, I'll take profit. Or from this low where market has formed this first high from where market turned bearish, I will take this line, and from here to here I will take this line and I will plot it here after the breakout. So my second target, if market goes up, will be here. So this is where maximum I'll hold the stock till. After that I'll book profit, because after this most of the time the market consolidates, plays, and might fall down, might go up, but once it hits your target, take profit. And we'll also talk about reversal patterns and channel and wedge breakout. So I'll show you a few examples for you to understand. So let's look at Tata Steel on a daily time frame. Let me just change the color. So let's look at Tata Steel on a daily time frame. So Tata Steel has had a huge run up from around 200 level. It has gone to around 1500 in less than 2 years. So from 2020 till 2022, market has traveled from 200 to 1500. So it is a huge increase, but could we catch the move? That is the question. Can we catch this up move from here till here? Definitely we can, because there is one pattern where the market rounds on the top. So it rounds on the top and it comes back to the low from where it started. So it makes a high and starts rounding on the top. So you can see it's rounding on the top and it is coming back to the low from where it started going up. So if you can see, it is basically, let's say it's like an igloo. It's like an igloo. But what we need to know, whether we need to buy here or not. Most of the time, if you buy here, it will go up. Most of the time. But you need to know where to buy. That I'll explain exactly why you need to buy here in my webinar. Because not always rounding tops work. Especially this is a very bearish pattern, and why it works I'll explain on my webinar. But you need to know that this pattern, if you go to any chart, you go to a daily chart and you check for these kind of patterns, especially when the market has fallen a lot. You look at 2008, 2007, 2008 correction. Okay, so market basically, it looked like it went up, but it came down and it was like a rounding top. Then it took support, consolidated, and again went up. So that is Tata Steel. So from here, if you would have bought around these levels, from where I mark the levels, the market has gone up. Also, let's say you don't want to buy here. So this pattern is called inverse cup and handle, which is a very bearish pattern. It's a very bearish pattern. So market should have broken and gone below. But finally we got a break of this channel. So this two trend line we drew. Finally a break happened and market went to 1500. From around 500 level, 1500. 300% increase in 1 year. So that is why you need to know, it is not only, okay, you invest, if you had invested 500, it went to 1500. You invest in 500 here in 2018-19, it went to 1500. But you need to know where to invest, when to invest, whether you need to invest If it goes against me, what will happen? Should I take my stop loss or should I let the market decide and go up? There are a lot of factors that play in investing in the stock market. So let's go to the next slide. So the same pattern you can see. Same pattern. Rounding top, comes back, again goes up. Same pattern. Rounding top, takes support and makes a new high from 200 to 800. So that's a 400% increase. So let's look at Adani Ports on a daily time frame. Adani Ports also, now you see it's the same pattern. Rounding top. But here also you can see here also rounding top. You can see here also rounding top. So if market would have gone up, there would not be any price below this. And I would have told like this, no. But there is always a logic. It took support here exactly. There was a reason why it took support here. That I'll explain in my webinar. Why exactly it worked at 169 rupees. Why 169 rupees rounding top worked but not at around 200 rupees. That I'll explain in my webinar. But this pattern, this rounding top pattern is a very bullish pattern. You can say it's a bearish pattern, but for me it is a very bullish pattern, especially in a correcting market. It is a very bullish pattern and followed by consolidation and a breakout. It's a very strong breakout. So if you see Adani Port, let's say it was trading at 169 here. It was trading 169, yes. So what has happened is the market from 169 has went and made a new high at 390 rupees. Made a new high at 390 rupees. So that is double. It went to 390. So that is why you got 100% increase in less than 1 year. 1 year you got 100%. And this is not 2020. This is not 2020. I'm talking about before 2020. 2016, 17. So 100% increase in Adani Ports. Now Adani Ports, yes, you would have got 100% increase. But then after that, if you would have held the stock for investing, you can see the increase after that. It has gone to 900 rupees. So what is trading at 170 has gone to 900 rupees. So these are insane kind of returns. And that too in 2017, 2 years, 3 years, 4 years. In 5 years, you have tripled and quadrupled your money in 4 years. So we'll talk about now Kotak Mahindra Bank. So Kotak Mahindra Bank, we can see this resistance that was happening here, which became support, and then the market rounded and took support here and again got a run up. So this was in 2018 of November 2018. We had Adani going up in 2016. Middle of 2016 to 17, we had Adani going up. Then we had Kotak Mahindra going up from 2018 November till 2019 end. So you can see that these patterns repeat and repeat and repeat in the market. The market psychology remains the same. People want to defend this level, and rounding top means it is actually a bearish pattern, but what happens is most of the time market goes up. Most of the time you see. And why at 1000 it has gone up, that again there is a reason for that. So you can see Kotak, yeah, again it was taking resistance here. So I've talked in my previous video about how resistance becomes support. You can see this was a resistance before. This was a resistance, became support, and then look at the move. Look at that huge move towards 2200 from around 1000. So again, you made 100%. Here also you made around, let's say 80%. So rounding tops, now you understood why very powerful pattern with a key support and resistance level. You can make insane return. This is the only thing you need to know. Nothing else. Rounding top pattern, make 100% return. That's it. Again it comes Okay, if it is rounding, this is not rounding. So this is more of a crash. It's a parabolic move. So most of the time, you normally don't get this stop and then a consolidation and then up move. Most of the time it breaks and then you get a fake out on the downside and it goes up. So let's say you have not taken this 2020, you are not bought during 2020, still 2018-19, if you have bought, still from there it has gone up. 1 year, 2 year time frame, 3 years, it has gone up. It has gone up 120%. That's a good up move. In 2 years to 3 years, 100% is a very good up move. In less than 1 year, 100% is an excellent return. Excellent return. Very excellent return. Within 1 year, if you are able to get 100%. But ideally 2 to 3 years, 100% is a good return. It is a very good return. 100% in 3 years, 2 to 3 years is a good return. Anything 5 years also 100% is also, it's a reasonable return. It's a good return. But you're looking to double. 1 becomes 2. Let's say I have 10,000 I'm investing. I wanted to become 20,000. So it should become double. Or let's say I have 1 lakh. I have 1 lakh rupees. I'm investing. Why? Why am I investing? Why am I investing? To double my money. In a good company, I want to double my money. I want to invest in the company and I want to make bank. Otherwise, why will I invest? I won't invest. I'm looking at others investing and then I am going and investing. I'm going and investing. Otherwise, I will not invest. If I don't see these patterns, I will not invest. Because I buy here, market is crashing. What will happen? Let's say I buy. Okay, let's say I buy here. Market is going up. Market is going up. Market is going up. I buy these highs. Market corrects. Now I am panicking. I see minus 50%. Okay, what do I do? Do I hold? Do I sell? Do I buy more? I don't know. What if I buy more? Let's say it keeps on going down. It goes to 0. Market goes to 0. What will happen? So there is always a logic behind investing. It's not keep on buying. Market will go up. So there are some chart patterns that are there which will really help you guys. And you should know price action also. Simply because it is coming like this, I'll buy here. No. There is always a reason behind why you need to buy here and why I have to keep a stop loss. Because I am not God. I don't know whether this up move will happen or not. I am not God. I don't know whether this up move will happen or not. I am just predicting based on big players that they want to push the price up from this level. So I will buy along with them. I see them buying here. I will buy with them. They are buying. So even I need to buy. They are buying for a reason. They want to push the price up. Especially, let's say, Kotak from 1000. They push the price up. Again, they push the price up because there is demand. People want to buy here. Simple. You guys keep on buying the top. Suddenly it crashes. You sell and you make huge loss. Because you sell and you give those people your position. That is what crash. Market is falling. I go. Let's say I am Bob. So Bob bought only at the highs. Bob kept on buying at the highs. Okay, suddenly the market is crashing. Bob does not know what to do. So Bob goes and sells everything. He thinks market is going to crash. What happens? Market does not crash. So this big player, he sees Bob. He's like, Bob, I have money. So I have money. I go and buy when Bob is selling and I take the market up. Also what happens is, Bob will not sell. Bob will not sell because he thinks that the market will go up only. So he will not sell. Then what will happen in the end? The market will go to 0 and he will make a huge 90% to 100% loss. because he did not see that the big players also are selling. The big players who have money also, they are selling. But Bob is keeping on buying. Bob is buying from this big sellers. And market is going down, and he has a negative portfolio. So this is what happens. Market is coming down. I keep on buying. I don't know. Then finally I see minus 90% to 100% and I exit in loss. So what happens? I exit in loss. People, this Tech Mahindra had crashed. It had crashed and it was trading at around 60 levels. So if I show you the stock price now, you will be amazed, because this chart pattern started the move for a bullish trend. So this Tech Mahindra, what I showed you, that rounding top. So what happened? The high from where it fell, where it rounded back to the top, it broke. Now you know that cup and handle pattern. Okay, if market breaks this, go long and make money. But what happened? The market reversed. You would have gone long, you would have kept stop loss, market reversed. Okay. In my previous video, what did I explain? I explained few important things for investing and trading. Yeah. I explained that the market comes below a level. And market comes below a level. Fine. It's a good level where price action has happened. Now I would have entered long here. Okay. And I would have kept my stop loss, because the market has crashed. I don't want to take any risk. So let the market go up if it is going up, or let my stop loss hit, or let my break even stop loss hit. So what I'll do, I'll go long. I went long. I've kept my stop loss here. I've kept stop loss. Everyone has kept their stop loss here. So what is stop loss? Sell order. So in the last video, what did I explain? So a big player makes sure that the market comes below the support, so that supply happens. Then he buys, buying. So he has bought from 2010 till 2013. So he has bought for 2 years. 2 years he has bought this Tech Mahindra shares. Fine. And you can see that volume also, you're not able to see in the volume where he is buying. So he has kept the market for 2 years in this level and finally took it up. You can see from around 206. I'll show you what price is trading at. Okay. It went to a high of around 750. From 750 levels, it went to 1000 rupees. From 1000 rupees, it has gone to 1600. 1600. So what was trading at around? What was trading around 206, 60 rupees to 206, how the market went up. So during this consolidation period, he has bought a lot of shares in Tech Mahindra at around 100, 150, 130, 140. These levels he has bought. Then he has taken the market up. That's simple. So from here, he has consolidated the market for 2 years and finally you got an up move. So you got insane returns in Tech Mahindra after that. So let's say you would have bought at 60, but you don't know. Let's say you would have bought at 60. Now you'll be like, Rohan, I could have bought at 60. I know the market will go up. But that's not how it works now. So let's say market would have reversed and hit your stop loss or gone to 0. Or let's say it's trading at 1 rupee. What will happen? So you should never be overconfident in the market. Never be overconfident in the market. So you don't think you will push the market up. You bring in 1000 crores, 10,000 crores to move the market from here to here. Then you talk about moving the entire market up. So chart patterns, if you look at Tech Mahindra, we're looking at around 2015. So market went up. So now it is in a bullish trend. So 2015, the market started correcting. In Tech Mahindra, this stock started correcting. Now it went into a channel. So the market is making lower highs and lower lows, but it is in a channel, or two trend lines. If you join, it's called a channel. It's going down obviously, so it is called a channel. The market is taking resistance here, coming here, taking support, taking resistance here, coming here, taking support, taking resistance here, coming here, taking support. So if you see, I told you resistance and supports become weak more number of times the market touches. So how many times it is touch support? 1, 2, 3, 4. So fifth, sixth time easily can break, and so fifth or sixth time it can break and go below. Same thing. How many times it is taking resistance? Once, twice, thrice, 4 times. Fifth time it broke and went above. So if you have bought, you would have made money, no doubt. No doubt you would have made money. From around 500, 400 levels, 500 levels, it went to 800. So almost your stock doubled in 2 years. Not even 2 years. In 1 year, your stock went from these levels to these levels. If you book profit at 100%, good for you. Otherwise, again you got entry. Let's look at the next slide. Again you got an entry at the same level. So market came again. Again you got a rounding top kind of pattern. Plus you got a breakout of trend line. You would have gone long. You would have made insane money. 500 rupees has gone to around 1,500. So you got a 300% return in 1.5 years, 1.5 years to 2 years. So also again here also you can see market came below the support. I was buying, not letting the market fall. Another support is there. So I've kept the market between these two supports and I have bought before I have taken the market up. So we will also look at Bharti Airtel. Bharti Airtel same, all same. You can see in 2000, this happened in 2020-21. If you don't believe it, 2020 March low was formed. 2020 November market took support and again gave you 100%. All the other stocks are giving 100%. Bharti Airtel came, took support and again gave you 100%. So this powerful chart pattern, rounding top, you need to know, because this most of the time works and you make a lot of money with this pattern. Also, if you'll find some patterns like bull flag, then you'll find bull pennants, but most of the time your rounding tops are the best patterns. So I guess you guys understood. So market has gone up, rounded, taken support, gone up, rounded, taken support, gone up. So rounding tops, very powerful patterns. Don't think it is a bearish pattern and sell all your stocks. Start buying. Always buy. Once you see this pattern, buy. But in my webinar, which I'll be releasing in a few months, I will explain why rounding top, let's say in Bharti Airtel at 400 rupees will work. Okay. So that is it for today, guys. I hope you guys have understood this rounding top pattern. Very important pattern. And if you go and check the market out, go to TradingView. Go to tradingview.com. Check the market out and see for yourself. Always go and backtest. The market, nothing is 100%. That is it for today, guys. I hope you guys have a great day. Thank you.